Yeah, it's me, Mr. Words. I'm gonna be enlightening you wherever you are today about what I found in the market. Yeah, what I found in the market. So, without saying much, I'm gonna be. I'm going. This topic is gonna go into three videos. So this first video is the first type one. So I'm gonna just draw. So what we're going to be using in this model is aligning two time frames for our trade approach. Is all what you know before, but it's just like trading like the institution, trading like the institution. So I'll be using two time frames, the 4 hour and the 15 minutes time frame, the 4 hours and the 15 minutes time frame, 4H, 4 hour and the 15 minutes time frame. Yeah, the 4 hours and the 15 minutes time frame. So yeah, in the 4 hours time frame, all you just need is for market to drive down to a liquidity pool. A liquidity pool is where institutions have placed an order before. Yes, when price comes to this place, we need to see something in 15 minutes and then enter from that 15 minutes time frame up to the high, the drop liquidity. So that is it. It's just this type one is just all about, it's like a swing approach. Yeah, it's like a swing approach. When you catch a trade inside your demand zone or your supply zone or your order block or your any zone that you use for entries, like what you see, what is your point of interest? The point of interest actually means an area you are hoping to either sell from or buy from. It's just like a demand or a supply zone. So it's either of that. So you see that in your 4 hours. So there's one thing in trading. Before you look for where you want to buy, you have to know the direction of the market. You have to know the structure of the market. Without knowing the direction of the market, you just be diving into losses, be diving into losses. So you have to know the structure or the direction of the market. You have to know where liquidity is resting, where is the market drawn to. So after you know all that, then you can now look for where you are possibly going to be buying from or where you are possibly going to be selling from. You understand? So that's what. So without saying much, no, well, this video is actually for people that already know about structure, about liquidity. What I'm just trying to do here is just showing you how I approach the market, what I see before I enter the market. So this is type one. I'm going to do type two. I'm going to do type three. So the type one is actually a swing kind of trade where you buy from the top or from the bottom down to the break of structure where the market is going to take out the highs or the lows, something like this. Market will come and take this high. Yes, come and take that high. You understand? So that is it. So let's dive into the market. So next thing you see is the charts. So we're back. This is the 4 hour time frame. The 4 hour time frame. So we're going to be looking for a leg to use. A leg to use. So you can see from this buy trend. So I've not subscribed my Telegram, so we'll not be doing play and back. So from the next video that I'm posting next, we'll do more replays. So for now, this one leg is a leg structure. So marking this, you already know that okay, we are on the buy trend. So a group structure here. So what we'll now be doing is to look for where price will actually come to before bouncing to the top side. Before bouncing towards the top side, you have to look for a point of interest. You have to mark it from the down part, the extreme, down to the up. So there's one here. This is a demand zone. So I will drop a video explaining demand zone. I will drop a video on POIs. I will drop a video on POIs. I will drop videos on POIs. So that's a demand zone. That is a demand zone. A demand zone. So you can mark the demand zone from this top, this place, down to that part, to the down part. So that is a demand zone. Then what you do next, you just go down to the 15 minutes time frame. That is the last leg. This is swing type. So we'll talk about two others. Two others is very interesting. They are very interesting than this. That one you're gonna be taking trades continuously. Just like a continuation type of entry. But let's talk about the swing type. This one for people that are busy, that they don't want to be on the chart often. So you can obviously just take your entries from here and scale up to the highs. It will take days, can even take weeks to get to the high, can take weeks to get to the high. You can see it took weeks. There were a lot of entries. For the second model we're going to talk about, there were a lot of entries along the way, but for you that is very busy, you will just stick to this and type 1. Type 1 is a swing type where you hold trades for a, for a for days because you are targeting the 4 hour high, which is going to take out. So you understand. So then you scale down to the 15 minutes time frame. Scale down to the 15 minutes time frame. Yeah, let me explain something before we go to the 15 minutes time frame. In the 15 minutes time frame, we want to see something like this. Want to see something like this. To see something like this. The 15 minutes time frame. Something like this. Want to see another candle sweeping another candle. You see something like this on that candle, sweeping another candle just like this, and another candle engulfing it, and that candle engulfing it to the upside like this. So another candle engulfing it to the upside like this. So then we can take this guy as our entry, this guy as our entry, or we take this other guy as our entry. It all depends on you. If you are patient enough, you can use this middle candle that swept and rejects, this middle candle that swept and rejects, this middle candle that swept and rejects from this is what we call a liquidity candle. It's a candle that dips into, we have a 4 hour zone here that then it dipped into. So it dipped into it, swept this liquidity, clicked the orders inside this 4 hour zone, and rejected and closed. So the other candles bought, or if he's selling is sold above this highs here, then you can enter from here and buy. So that is it. So we are going to look for inside the chart. So I will not talk much. Look for inside the chart so you get to understand more inside the chart. So what next we've seen is the chart. So sorry guys, because um, I've not been able to subscribe my telegram. The 15 minutes part of this side will not show. So I'll use 1 hour to explain. It's still the same thing. It's the same candle you see at the 15 minutes that you see. Like the candle I want you to explain it is the type of candle you see in the 15 minutes time frame. So you can see that the candle that dipped into this POI, the candle that into this POI. First of all, this candle. Okay, you can see this is what I'm talking about here. You can see there was a sweep, like what the diagram I drew before. There was a sweep and the candle was engulfed. Candle was engulfed. So you can enter from there and swing it to the top side. But you can see that you had an SL in your first try. Because in trading, it's it's not it's a probability something we do here. It's not it's not sensitive like you say, oh, it must I must hit tip every time. You just have to be able to attach yourself from the trade. So if you're targeting the swing high, you can see if you're targeting the swing high. So your first trial end up as a loss. Your first trial end up as what? A loss. So to me, I have two shots in the market. If the two shots, like I have two bullets to spare approaching a particular setup, if the two setup end up as an SL, I stop pursuing that setup. I just calm down and restructure everything, or I leave that pair and just I will stop trading for that day and resume the next day. So then you wait. You don't just leave the market. Oh, the market has stopped me out. I'm not trading again. Blah blah blah. Just get angry. You just wait to see what really happened. So inside this zone again, you saw another another sweep. So this one didn't even sweep well because this is the candle next. Let me zoom in so that you guys will understand what I'm talking about. Let me zoom in. So let me take this back so we know so we can see what we're talking about. So remember I'm using the 1 hour time frame. This is what we are actually looking for. This something like this we're actually looking for. Something like this we're actually looking for. So you can see here this candle. You can't use this. You can't use this. You can't use this. You can't use it because the sweep is not really a sweep. So you look for the next candle that liquidates that have that type of rejection. Look for another candle that has that. Look for it. Look for it. So there's one here. There's one here. There's one here. So even this one swept in liquidity because this place was a former low. This place was former low inside the buy zone, inside the 4 hour zone, the 4 hour demand zone. That place was a former low, so it swept it. It didn't break it, it just swept it and rejected to the upside. So you can see our model there, very tiny. Let's take this guy backwards. So you can see our model. So there's a sweep here. There's a sweep here. This is a sweep. Let's delete that guy. This is a sweep. So the reason I did not pick this guy, the reason I did not pick this guy, but there's one here. The reason I didn't pick this guy is because of this, because of this liquidity here. So in trading, you have to, since this guy failed to form that model, this sweep and reject and engulf, is going to be used as liquidity. That's why market came down there and took it out and rejected. to the upside. So after then, after then, after then, markets went up, engulfed. It broke with the body. So what we just need is breaking with the body. So there was a break in the body. So after the break in the body, what's next is just to set your entry at the high of the candle that was swept at the downside. Look at the high over there. This is the high over here. The high is over there. This is the one that swept. So you, you take your box two from the high over there down to where it triggered. This is the candle that after the breaking with the body, there's a candle that came back to trigger it, which is this. Because of no replacement, if not, I'll be using replacement, which is this. Then what you're gonna do next, you take your go to your MT5 or your whatever you use as your execution app, you set it there and you swing it to the upside, swing it to the upside, swing it to the upside. So I will do for other pairs too. This is because this one 0 USD, swing it to the upside. That is what I'm saying is sweet type. It's for people that are very that see that it went up many times, came down many times before going up last. It's for people that are very busy traders, very busy traders. That so you can see that the first time we tried to approach the market, we had an essay. So the second time we caught it, went well. Give us a 17 hour trade, so you can see it. So what you just need is a 4 hour zone. After a 4 hour zone, what next you need is to scale down to the 1 hour time frame or the 15 minutes. Like for me, I use 15 minutes time frame mostly. The reason I'm not using 15 minutes time frame because my trading view cannot go down to the 15 minutes time frame on this. So let's try one more pay. Try one more pay. We're already 17 minutes in time here. Let's try one more pay. Yeah. So guys, this is GBP USD. GBP USD with the forward time frame. You can see that GBP USD is bullish from this break of structure up there. So from that break of structure up there, break of structure, this break of structure is BUS in short form. So you can look for, you can see that it came down, bought from somewhere here, bought from somewhere here, bought from somewhere here, bought from somewhere there, went up. So I want to teach you guys another, it's still the same swing entrance. So when he bought from there, it went up, he had a resistance, it failed to break to the upside. So that is why you have to mark other higher zone that can, a supply zone that can retrace price. Even though that one I did just now, there were other zones that retrace the price. So the other model I'm going to talk about next time, that's when I'm going to explain how to capture those entry, those retracements. So after I bought from this place, we had an obstacle here, then it came down to sweep here. You can see it came down to sweep here. So let's see this three place have cycled now. There was first it triggered after breaking a structure. You can see it. Let's recap. After breaking a structure here, that's one. After breaking a structure there, that's one. Came down, triggered from there. I went to this other side and triggered from here. So what we'll do now is go down to the 15 minutes time frame and look for that our entry model, that our sweep, reject and engulf. sweep, reject, and engulf. So you can see there's a zone that will stop our market from going down further here. So that's what will be our exit points when we are selling. When we are selling, when we are selling. You can see we're very lucky this time that inside where our 15 minutes candle stopped, that's where the explanation is coming from. So you just move this guy out of the way so we'll get to see what we are seeing very clearly. Get to see what we are seeing very clearly. So this one showed up very well. You can see inside the 15 minutes time frame we have this sweep price after sweeping it reject. You can see the way it rejected. You can see the way it rejected. Then this candle engulfed it. You can see something that happened here. After closing below this guy, it didn't come back. After after closing after closing below this guy, the market did not come back. It just went down. So in case you see something like this, that there's momentum in the market, you can use sell stop on your uh, MT5 or whatever you use for execution. You can use sell stop. That you use sell stop, or you just wait for like this one now. The price came back to retest it. You can see price came back to what retest it. Price came back to retest it over here. Price came back to retest it. Price came back to it. If you don't have that, sometimes market will just do that and just sell downward. So that's why you have to use sell stop. Once you see that your liquidation candle has been formed like this and it's closed, you can just go to your execution app, set entry here, your entry there, and just swing it to the place you want to swing it to. You just do something like this. You just go to your MT5. This line, that's when it closes, when that's your this will close like this. Before the next candle open, you set your SL there, your entry there, or SL above that. That is the liquidation candle. And you can sell to any opposite zone, in the 4 hour. Like this place now is an opposite zone in the 4 hour. It's an opposite zone in the 4 hour. That place is an opposite zone in the 4 hour. Or you can just get opposite zone in the 4 hour. So trigger it like this. So I will check the days that the trade used to reach TP. So it's swing trade. So people that have patience can see what the trade did. It came down, came back, came down, came back. Can see even my screen of my device can't even show everything. So let's calculate the days the trade used to from TP May 26 May 26 down to June. Okay, June 17, 1st of March. 1st of March to June 17. You just holding a trade. Wow. It's for people that can to June 17. That is May, June. Hmm. For people that can hold trade very much. Like me, I don't swing. I'm just teaching it for people that love to swing trades from one position to another position. This first of May, 1st of May down to 17th of June. It's not up to 1 month though. It's just it's more than 1 month. 1 month with 17 days, you hold a trade for 29 RR. So that is all for GBP USD. I'm just explaining one from the pair I trade. So the next model will be interesting for people that love day trading. So I will teach that one. That one is daily. That one is intraday trading. So that one is for intraday trading. So we'll talk about that one next. But this one is for swing trader, people that can hold trade for a long period of time. So this for AUD USD. So this for AUD USD on a 4 hour time frame. The 4 hour time frame. The 4 hour time frame. So yeah, so there was a break here, the downside, a break there. So after that break, we're expecting price to come to any supply zone. This one here down to here, price will get there. So you're just going to mark all the zones, the possible zones price can come to. So there's something that happened here because of this momentum candle, so price didn't have the strength to go higher than that. So anytime you see this kind of candle in the 4 hours, price is few of the times price rejects from that place. Few of the times price rejects from there. So that's what the market did. It rejected after clearing this liquidity. It rejected. You can just mark your every box to from the liquidity because this is a liquidity point. So liquidity points. Yeah, that's the liquidity points. From there, because that place is an FEG, so it's a place you can buy from. If you go to the lower time frame, you see that that place is a demand zone. The higher time frame, it's an FEG. So points of interest in the higher time frame still show themselves in the lower time frame, but in different forms, different ways. Because the lower time frame that delivers price to the higher time frame zone. So that is, just know that lower time frame delivers price to the higher time frame. So that is it. So we scale down to the 15 minutes time frame. Scale down to the 15 minutes time frame. So this is what we are targeting. We are targeting that 4 hour leg, targeting the 4 hour low, which is right here. This right here. This is what we are targeting. So let's go back to the 15 minutes time frame. The 15 minutes time frame. So this is the 15 minutes time frame. So this is the 15 minutes time frame. There was a sweep here. So sweep here. And price broke below it and came back to retest it. Price came back to retest it. So that candle is enough. Then you set your long position to right here and your SA above it a little bit. Oh, the wrong sell, not buy. slightly above it, then target this swing low. This one, it will not take long to reach the swinger because it's just a quick setup. Can see. Or if you don't want to do that way, you are afraid that, oh, there's a demand zone here that price is going to reject from, like scared type, you can actually just set your TP there and you're out of the trade. All those other news will not scare you because you're already out of the trade. You can see. That is two way. Either you target the swing low, which is a liquidity, drop liquidity, or you target this guy over here. Any of them, so that is it. This one is very clear. This one was very clear. It was the model was so sharp on it. So sharp on it. So sharp on it. It won't show you again. It won't show you again. That is it. That is it. That is it, my guys. That is it. That is it. So this is NZUSD. So we are going to just this a break. That's a break for our viewers. So that's a break. So markets bought from this inner block, bought from that hidden block over there, bought from this hidden block over there, and so to take it out. Yes, so to take it out. So, so I'll just explain only that. So if you are very good, after that you can still catch this second cell. This was the real sell. The other one is just a quick trade. For me, I will be able to catch that. This was the real sell. So let's explain this first one before we explain the other one. So we are on the 15 minutes time frame. You can see where we marked in our 4 hour. Yes, where we marked in our 4 hour. Price enter there and give us that sweet sweep and reject, sweep and reject. The close of this candle was too big, was to the other side. You can either take it from this block or you take it from this one. It all depends on how the third plan, this third candle closes. So in this one now we are going to take it from the candle that was swept as we did in Euro USD. You understand? You know, in the Euro USD, as we did in the Euro USD. So it targets this low. It shows that before our break. You understand? Short 4 hour break. We put the SA a little bit above it in case of come there to come as though some desperate. There should not be that far. Should not be that far. You just give it a little floating space. Depends on you. It all depends on you. Just depends on what you want. Then you target there. So we did 1 to 5 and it's rejected. Rejected, and over here when it came down to the other zone, the original demand zone, use this our first buy because we came out of the trade early, use it as liquidity, came back, sweep it, and it started rejecting. You can see this one. The candle did not swept it, but it formed a liquidation candle. Let me show you where it formed it. It formed it inside it. You can go to any other time frame and still observe that you will see, but here it formed it inside it. These two showed rejection. This two candle is the rejection candle. So the sweep is the sweep and reject now form inside it. What you now do now is you you will not go and say you want to put your SL, let me just say you swept, go with this guy that is swept. So you want to put your SL here. No, put your SL above the starting point of the rejection. Then you target the 4 hour low. This is the 4 hour low over here. We need to go back to the 4 hour, be looking for the 4 hour low. The 4 hour low is right there looking at us. You can see it. Then you take it down. So you know the trade, the trade will be like 2 days trade. Let's check. It triggered June 14 and ended June 17. So the trade is not was not that long. It's not that long. So that's it for NZUSD. This one triggered 9th of June and ended 11th of June. So that is it. Yeah, this USD card, which will be the last pair, I will show example of this 4 hour to 15 minutes entry. You can still use other entry lower than 4 hour. From 1 hour, 30 minutes, 45 minutes, 15 minutes, go down to 5 minutes. It all depends on you. It all depends on you. Yeah, it all depends on you. But for me, I use 15 minutes time frame because it's a 15 minutes. It's a balanced time frame from the 4 hours. So it's a balanced time frame from the 4 hours. Yeah, it's a balanced time frame from the 4 hours. So we had a shift over here. So market was eventually selling. So this was the last break of structure over here. There was a break of structure. So market shifted over here, shifted over there. Then this will be our next target if price comes down to mark any POI. So price came down for this very last guy. Price came down for this very last guy. This other block. You go down to that liquidity. You're not going to say you want to put it here. No, you just stopped out. You put in the last low. Yes, the last low. And then what do we do next? 15 minutes straight up. No waste our time to look for any. Guys, you wait. You don't go to the 15 minutes. You set alert tool on your trading view on the 4 hour zone. Once it trigger, that's when you go to your 15 minutes time. If not, you just go there and be taking unnecessary trades. You wait till it goes to your zone and gives you what you're looking for. So you can see this guy failed to create what we are looking for. This guy fails to create it. So it formed in this side. And there's a tricky stuff here. And you put your eyes to it. So it swept it. The same candle that swept it. The same candle that engulfed it. That broke above it. Broke above it. You can see was a little break. Or is the next candle that even broke above it. Yeah, the next candle that broke above it. It doesn't really matter. So you don't need to be looking for your entry down there again. Can see it depends on you. It depends on you if you don't want to get a miss entry. You can just say, okay, since it failed to break this guy before it's rejecting, before this candle is rejecting, so let me just take it from this guy over here. This guy has swept and showed sign of buyer sign in the market now. So so from there you smash it to the upside, sweep, reject, break or engulf. Let it be a body close. That is what we just do. Let it be a body close. You understand? Let it be a body close. That's what we just need. You can see just start buying to the upside gradually, and this the area is even crazy. The area is crazy. So it reached TP 9th of June. It triggered 1st of May. That is 1 month and 9 days for you to hold it 39 days. So swing traders they can do that, but for me I'm an intraday trader, so you watch out for the model 2. The model 2 is 2 days trade, 1 day trade. Hold it. You know you cannot. The model 2 you can't hold it up to 2 weeks. Highest 5 days up to TP depends on the momentum in the market. So that is it. So one thing you need to know that even in this type of trade you can get an SL. Yes, you can still get an SL. So but sometimes you get your SL trying it the first time because it's a big zone. If you go down to the 15 minutes when you have trigger your zone, you can see in the 15 minutes and it will stop you out and then later go and form after stopping you out. That is it. That is it. So you have to be able to put your mind that okay, even though I have the best strategy in the world, we are trading probability stuff. It's not certain, it's uncertain, it's uncertain. So you have to know that okay, I'll detach myself from this that I'm putting my money on this for my money to be multiplied. So you don't have to put all your heart or your mind to that I must win this particular trade. No, you must not win it. We are just putting our money for wins. The only way we make money from trading is executing. Have an edge, then execute it over 100 trades. Not one trade does not determine you are a bad trader. One win does not determine you are a good trader. It's over time. It's over time. You keep executing, and you keep executing, and refining your edge. You are refining your edge. You are refining your edge as you go. You refine it. You are refining it. You are sweet. As the market is changing, you are adjusting you are not changing your model, you are adjusting it to the market, yeah, the market. So you have to be able to be you have to be able to move with the market. You have to know what you are doing in the market. That is it. So I'm done for the best model. So you can like, subscribe to know when I'm going to post the other so I get a notification when I post the model 2. The model 2 is very interesting. I know this one is kind of boring. It's not boring actually. If you're able to understand it, the sleep on rejection from 4 hours to the 15 minutes, like sleep on rejection, then it's not hard. It's not hard. So if you don't know where the market is going to, then your market so then you look for this, that sleep on rejection, three candle formation or two candle formation in the 15 minutes time frame, then swing it up to breaking of high or you swing it up to opposite zone. And if you don't want to do the high, you can swing it to the opposite zone. Say, okay, I know that this one is going to bounce the market. My mind does not carry me to hold it while it's bouncing. So you just take out your market from there and you rest. That is it. That is it. That is it. That is it. So we are done for now. It's Mr. Welch. The Lord is the one that taught me. It's my king. So I love you guys. I'm here to educate you guys. Thank you guys. I'm here to educate.